If you're looking for an investment that can earn up to 15% or even more per year, with maturities as short as just a few months, or even with instant access to your money, then stay with me and watch this video until the end. Today I want to tell you about an investment tool that offers all of this and more: peer-to-peer lending marketplaces. These are platforms where you invest in loan-backed securities or debt instruments. So how does this actually work? Across the world, there are hundreds of lending companies issuing loans to people and small businesses that cannot easily get financing from banks. To issue new loans, these companies need capital, and that's where retail investors like you and me come in. Instead of borrowing from banks, many of these lending companies raise money directly from investors through peer-to-peer platforms. The idea is simple. You provide funds to lending or microfinance companies by investing in loans or instruments backed by those loans. When borrowers repay their loans, you receive your money back plus interest. In some cases, you choose specific loans to invest in. In other cases, your money is invested in a pool of loans or even in a whole portfolio with no connection to a particular loan. One very important feature is something called a buyback obligation offered by many loan originators. This means that if a borrower stops paying or is late, the lending company commits to buying the loan back using its own funds. This significantly reduces risk for investors, although it does not eliminate it completely. Many lending companies issue short-term loans, often with maturities of just 1 to 2 months. This allows investors to earn double-digit annual returns while keeping money invested for a very short period. Some platforms go even further and allow instant withdrawals when your funds are invested in a loan portfolio. If this sounds complicated to manage, don't worry, it's not. Almost all platforms offer auto-invest tools. You simply set your preferences, such as interest rate, loan duration, or loan type, and the system automatically reinvests your money when loans are repaid or when you add new funds. On top of that, platforms compete for investors by offering cashback bonuses and promotions, sometimes reaching up to 5%. Most platforms also have refer-a-friend programs, allowing investors to earn even more by inviting others. Now, let's talk honestly about risk. Like any investment, peer-to-peer lending is not risk-free. The main risk is that a loan originator, the company issuing loans, might not be able to honor its buyback obligation if borrowers default. Evaluating these companies is not easy. It's not enough to just look at profit and loss statements or balance sheets. You also need to understand the quality of their loan portfolio, because that's where most risks come from. Unfortunately, many platforms still provide limited and outdated information about loan originators. Financial data is often incomplete and lacks detailed insight into loan performance. Historically, however, the largest investor losses did not come from normal business failures, but from geopolitical events and fraud. The war in Ukraine and the pandemic were the biggest reasons for losses in this industry, and some investors also suffered losses due to fraudulent behavior by a certain platform. That said, since new regulations were introduced in several countries, the situation has improved and the overall market has become more transparent and safer. Peer-to-peer lending platforms offer a very attractive product, but investors must always remember that returns and risk go hand in hand. Now let's briefly look at a few key platforms. Mintos is the market leader, with over 12 billion euros invested and around €500 million under management. It was the first platform in the sector to obtain an investment brokerage license and has expanded its offering to include bonds and ETFs. With its long track record, Mintos has experienced both strong performance and difficult periods. In my opinion, it perfectly represents both the potential and the risks of this industry. As shown by historical data, Mintos's 5-year annualized returns after losses are around 6%, which indicates that if you want to get bigger returns, you need to choose loan originators wisely. Peerberry is another strong platform with over 3 billion euros invested and a current portfolio exceeding 100 million euros. Its main loan originator group, Aventus, offers group guarantees, meaning that if one company fails, the entire group covers the obligations. This model proved very effective during the Ukraine war, when 50 million euros of affected loans were fully repaid by the group, a very strong result for investors. Bondora takes a different approach. Instead of investing in individual loans, you invest in the entire loan portfolio. This allows you to withdraw money at any time, which is a huge advantage. The trade-off is a lower return, typically around 6%, but if flexibility is your priority, it's a great option. Finally, let's mention a newer platform, Nectaro. Launched in late 2023, It has already reached 20 million euros under management and paid 1.8 million euros in interest to investors. The platform operates under an investment brokerage license and has received very positive reviews from experienced investors and bloggers, showing strong potential for the future. To sum it up, there are many excellent platforms offering investments in loan-backed securities, but success depends on choosing both the right platform and the right loan originators. On crowdinform.com, you can easily compare top platforms, read user reviews, and access key data. We also provide AI loan originator analysis based on expert-created prompts, allowing you to ask detailed questions and make better informed decisions. If you want to learn more about alternative investing, make sure to subscribe and follow Crowdinform.